If you pay any amount of tax whatsoever, this video is for you, because there's a possibility you will owe a lot more money than you anticipated. This is because the IRS is about to receive an $80 billion injection of funds to raise audit rates, strength, and regulation, and collect an additional $200 billion from taxpayers over the next 10 years. Currently, if you earn less than $25,000 per year, you are 5 times more likely than anyone else to face the IRS. And congratulations if you earn more than $100,000 per year. Your chances of being audited have just doubled. So let's talk about what this means, how it will affect you, and what you can do about it. So let's start with the fundamentals. IRS stands for Internal Revenue Service. They are in charge of collecting the funds required to fund the federal government and enforcing tax laws amongst 330 million Americans. However, these enforcement rates have been dropping since 2010. The IRS primarily operates on a "trust me bro" method, in which you file the amount of taxes you believe you owe based on the metrics provided. The IRS can then double-check that information against their own records to assess if you paid the correct amount. If you did, you get nothing but a faint cry from your bank account and are free to do it again the following year. However, if you did not file correctly, or the IRS believes that you owe more than you paid, they will conduct an audit, which everyone dreads. When this happens, the IRS has reason to suspect that there is a mismatch in the data. They've determined that your revenue is high risk, and all they want is more evidence to prove your innocence. To be fair, the majority of IRS audits are conducted via mail. They have no ill intent and merely want you to pay what you owe. There is, however, a tax gap between what should be owed and what is actually paid. And there is currently $200 billion missing. So it's up to the IRS to collect more money, which is where you come in. Currently, 57% of Americans paid no federal income tax due to a combination of decreasing income tax credits, stimulus, and covered relief funds. However, the remaining 43% simply does not generate as much revenue. They are spending as much money as they need to, despite a growing deficit. As a result, it's only natural for enforcement to ramp up. You'd think that the mega-rich jet-setting business owners who write off every lobster dinner at Mastro's as a tax deduction would have the highest audit rates. But nope. According to IRS data, it is actually the poor. Those with annual incomes less than $25,000 have the highest audit rates of just about any category. In fact, that group was audited on a regular basis, just as much as the top 1%. Why? The majority of low-income audits are performed by computers that automatically send a letter regarding earned income tax credit, and everything is handled electronically without the participation of skilled employees. As a result, it requires very little effort. High-income tax returns, meanwhile, are frequently much more complicated, require a team of people, and involve expert knowledge of the tax code to prove any mistake. That is why it is a lot simpler to go after low-hanging fruit than it is to prepare for a lengthy legal dispute with someone who may be trying to boost the value of an artwork donated to a vintage wine charity for a tax break. The other problem is that the IRS does not have money. A lack of agents, budget cuts, outdated technology, and a high volume of tax returns have all contributed to the IRS's fewer funds to pursue tax evaders and impose payments. As a result, there are incredible delays, missed communications, disorganized accounting, and phone wait times that rival those of phone companies' customer service lines. The truth is, the IRS has so few employees that only 3% of calls are answered, and 17 million people are still waiting for their tax refund. However, with the introduction of the Inflation Relief Act, $80 billion will be diverted back into the IRS for the primary purpose of increasing revenue collection. Of course, whenever the IRS is mentioned, there are always people in institutions who claim that income taxes are unlawful, or that they are voluntary due to a misinterpretation of how the law is written. But don't worry, every single argument has been rejected. And with $80 billion in new funding, they're about to significantly expand their operations and make a lot of money. Because according to a 2013 survey, the IRS collects $6 for every $1 spent. And when penalties and fees are assessed, they add up quickly. For example, the majority of people are unaware that the IRS has the power to look back 3 years in order to audit a tax return. And if they identify a significant error, they could go back even further, sometimes even up to 6 years. Congratulations if you don't file a return, or if your return is fraudulent. There is no time limit, and the IRS can go back as far as they want to ensure that you are paying your fair share. And in terms of penalties, that's when things become interesting. On the surface, a 3% interest rate will be applied to all unpaid balances until they are paid in full. However, there is also a late payment fee of 0.5% per month capped at a maximum of 25%. And for those who do not file at all, there is a failure to file fee of 5% of the amount of tax unpaid each month, again capped at a maximum of 25%. So as a result, it's quite pricey. And under the Inflation Reduction Act, $46 billion will be spent employing more enforcement agents and tracking cryptocurrency taxes, an area that's relatively new to the IRS. Apparently, those earning less than $400,000 per year do not have to worry. The new funding will target tax evaders among the moneyed and large corporations, will be used to invest in technology upgrades to assist taxpayers, and hire more customer service representatives to avoid long delays. Others, however, argue that audit rates for those earning more than $100,000 have more than doubled in just 1 year, implying that those earning less than $400,000 per year are most likely the ones the IRS will conduct more audits on this year more than in previous years. However, there are numerous other factors that will raise your odds of IRS investigation based on metrics that they consider logical for your industry. So if you're a restaurant donor with a sizable home office deduction, that might be something to consider. Every deduction you take will be ranked against a panel of similar businesses, and if you fall outside that criterion, your chances of being audited will increase overall. Though the chances of being audited are still low, with anywhere from 0.2% to 1% of tax returns being chosen based on how much you make, or it appears do not make. However, the core issue remains a lack of funding, with the IRS currently spending approximately $14 billion per year. So how much of a difference does $80 billion make? The truth is that it all comes down to who you listen to. One side claims that Americans earning less than $75,000 per year will receive 60% of the additional tax audits, while the other claims that those earning less than $400,000 per year will not be targeted. The truth, however, is most likely somewhere in the middle. The bill states that it is not intended to raise rates for taxpayers who are not in the top 1% of earners, despite the fact that they may be subject to higher audit rates. Another thing we know is that IRS funding has decreased significantly since 2010. That is, an increased budget is unlikely to take us above a level we haven't seen before. All taxpayers' rates would rise, but higher income taxpayers would face the greatest increase in hiring. Furthermore, more than half of the IRS staff is slated to retire within the next 5 years. A significant portion of the funding will be devoted to mitigating attrition and improving customer service. We also know that approximately $200 billion in revenue is lost because of non-compliance and the failure to audit wealthy tax returns. So something needs to change somewhere to bring revenue back up to expectations. The tax code is insanely complicated, and it's a fine line between generating income and maximizing compliance. So at what point do people feel inclined to conceal their income and defraud the system, and how can that data be used to identify a solution so that more people cooperate? Everyone would pay their taxes if the tax rate was 5% and the penalty was death. However, if the tax rate was 90% and the worst case scenario was a slap on the wrist, many people would probably take the risk. According to one 2008 study, tax cuts can increase the tax compliance so much that tax revenues will increase in response. Unfortunately, the issue isn't so much with tax rates, which are fairly reasonable. Instead, the tax code is written in such a way that only the wealthy can afford to hire lawyers and tax experts to assist them to navigate the system. That means that high-income tax returns are close to impossible to audit because they require significantly more time and manpower that could otherwise be spent sending out automatic letters to people who lack the resources to fight them. You will require the services of a tax professional if you are self-employed to help you get through it. Yes, the IRS requires additional funding. It shouldn't have long hold times with most calls going unanswered. On top of that, they're using outdated technology rather than the best of the best, and they're still asking people to send faxes like it's 1997. Sure, more audits will come with the territory, but technology must be updated. More staff must be present for customer service, and once that is improved, tax away. But we're still not there. We can only hope that one day the tax system will be simplified so that people understand exactly what they are paying. As for what you can do to avoid becoming a target, the simplest solution is to earn more than $10 million per year. Easy, right? Or you can also keep good records. jot down any business deductions, and consult a professional if you're not sure what you're doing. The IRS is not something to be afraid of, but the more comprehensive you are with your bookkeeping, the better off you will be in the long run. That's all we have for today. If you'd enjoyed the video, why don't you give us a like and subscribe to our finance channel? Don't forget to hit the bell button below to get notifications on when we'd post next. Thank you for staying till the end of the video and hope you enjoyed. See you next time.